So thank you again for carving time out of your Sunday, and hopefully it will be worthwhile. Okay, so the agenda today, we're going to do a few quick words and thank yous from 9 to 9:15, and then we're going to kick off 12 amazing, awesome pitches from 9:15 to 10:20 a.m. Eastern time, and finally, we're going to round it off with a panel discussion. Okay, so because some of you're joining for the first time, I want to share with you guys what our teams, our tradition, how this is almost like a ritual. We start off by reading this to remind ourselves why we're learning together. So we highly motivated entrepreneurs have come together to enable each other to master the scientific startup methods, Web 3.0 business models, tokenomics, and incentive mechanisms to create alignment between users and platform so that we can get to product market fit, community market fit, and sustainable economic flywheels that create superior value for all involved, and together realize the Web 3.0 vision of a user-owned internet on Bitcoin. All right, so we are all here for transformation, and I hope that for those of you who have been with us from the start, 10 weeks ago, some of you even longer before that, today you guys get to see the fruits of your labor and to see the transformation that is only possible through collaboration and collective intelligence. Okay, and we were doing a tally, and can you believe it? Actually, over 101 people came together to make this reality. All right, so I say 101 plus. Why? Because although directly 50 contributors, mentors, my team members contribute to this, and 51 founders and co-founders. The reason why I say 101 plus is because there are people in the background, right? People on our teams that perhaps did not directly join one of our sessions, but they've been contributing to this. So maybe we could even double the number, right? So, but if we just take 50 and a 51 ratio, right, that's almost a 1-to-1 ratio. So this shows the level of service, of how high quality this pre-accelerator is, right? So as most of you know, pre-accelerators are rare to begin with, but a pre-accelerator with this level of service, 1-to-1 ratio, that's almost unheard of. And that's from the best of my knowledge, is we're the only one in existence, right? But I put a quote around 0 because the world's a big place, and perhaps there are some things we don't know. But to the best of our knowledge, this is the best program of its kind. Right. And I have to mention 3 really important people. And this is MVP. So I know a lot of people know Lean. So this is not minimum viable product. Rather, this is most valuable players. Right. So I mentioned that we were able to reach out to about 50 contributors. And without Trevor, Mitchell, and Will's help from the Stacks Ventures and Stacks Foundation, this would not have been possible. All right. With their help, we were able to reach all these people. Wow. All right. So by the way, if your photo from Twitter is not on here, accept my apologies. We're still putting this together, but this is, this is just to show you that so many people came together to make this a possibility, and we have so much to be thankful for. One, of course, I have to thank my team for staying up with me, sleeping less over the last 2 months, actually last 3 months, because we had to prepare for it, right? Also being here on the weekends. So thank you so much for making this a possibility for everyone. And of course, thank you to all the contributors, right? The contributors are, maybe you did a Twitter space, maybe you helped arrange a Twitter space, maybe you did something else for one of the teams, maybe you're part of the grant department. You contributed, and your contribution has not gone unnoticed. Thank you. Right? And can you guys believe it? Up to date, we already have 32 mentors who came to our classrooms, who either did lecture or did a workshop or did some other kind of significant thing to help out all our teams to get to where they are today, right? So thank you so much. Really, we could not have done it without you guys. We are super grateful. Okay. So maybe you guys want to know, what did it take to get to today's demo day, right? So you see 674, our grant was approved on March 17th. Trevor and I, we had been going back and forth way before then, but finally we got it submitted. March 17th, Will and the Stacks Foundation grant department approved it. and it was, off to the races starting from that day. And in that 72 days, about 30 days was the preparation, right? And about 42 days was recruitment. So we went through 674 applications. Right? About 400 something of those were backlogs from the accelerator, and about 200 of those were new applications. So a total of 674, right? So we cut it down to 25, right? So these 25 is already the cream of the cream, right? So of those, right, how many of them made it to today? How many of them made it through the gauntlet? Basically from May 28th to August 3rd. Our last class is August 3rd. So we're on July 31st right now. Okay. So how many people made it? Well, before I answer that question, let me walk you through what they did. Let me take about 5 minutes to show you how they got here. Right. So first of all, everyone knows that we're a pre-accelerator, and roughly speaking, right, they're here to learn essential startup skills, build a foundation, not just for their startup, but also do some real startup activities so they can gel together with their team or even add more team members, right? So why? So they can have a strong foundation and hit the ground running in the accelerator, okay? All right, so but what does that entail? Every week, right, for 10 weeks, there are 5 classes. Each class was on average 2 hours, sometimes a little shorter, 1 hour, sometimes longer, 3 hours, right? But look, we're planning to you multiply that out, that's 50 classes. We're planning to do 20 classes, but I think it was because of Mitchell, actually. Thank you, Mitchell, for saying we need more Web3 stuff in this, right? So before it was 20 classes on just lean startup stuff, right? This is Trevor and I. And then Trevor was like, hey, and then Mitchell said, well, it needs more Web3 stuff. So all right, and we said let's do a Web 3.0 immersion. So because of that, we added 30 classes. So total we did 50 classes. So just the classes alone, that's no joke, right? So my hat is off for all of you teams that were able to get through 10 weeks, 5 classes a week. Right? On top of that, every week there's a topic, and with that topic comes with one live task. All right, this is the actual startup task where they had to do something in real life, right? And on average, it takes 40 hours to complete, and that's why we would recommend people to come in with a team of 2. So each week, your time investment is about 20 hours, right? In any event, it's a heavy load, right? And then we have a once a week sanity check. It's an office hour, but actually it's more like a sanity check, making sure you're still on track, right? So what are they doing in this 10 weeks? 3 stages. The first stage is research, research, and research. So they're actually trying to invalidate their idea. And once they validate it, they have to pivot. And we found that's actually the quickest way to validation. All right. So of course, some people weren't able to hack it. So we lost a couple of people on the first stage, but most of the people made it past the first stage. And the second stage was taking all that research and thinking about how to turn it into a great product. And specifically, how do you turn it into a Web 3.0 product that actually, something that actually needs crypto, right? And building that and building that business model around it. And that requires focusing, right? And that also, during that second stage, a lot of people dropped off again, right? And finally, the third stage, which is the last 2 weeks, 2.5 weeks, pitching, or in other words, is actually putting everything together, right? This is the moment of truth when they find out, wow, maybe some of these things don't fit in those places. Also, this is when we're giving them very harsh feedback, even harsher than the first 8 weeks. And this is make it or break it time, right? Why? Because we want them to concisely communicate to our community what they're doing so they can find allies. Okay, so this is the gauntlet in 3 stages, right? And on top of that, they're required to spend even more time, right? So they're learning from how others apply 3.0, Web 3.0 technology and tools, because each one of them, they have to share case studies of successful cases, as well as how they applied Web 3.0 tools on their own projects. So you can imagine 25 different teams learning from each other, right? And this process, they not only learn from each other, but they also learn how to share effectively, which not only solidifies their learning, but it also paves the road for them to become mentors in the future. So imagine when we're hitting a pace of 100 new startups through the pre-accelerator every 4 months in 2023, imagine how many new mentors will be coming from that. And imagine how many more startups will be able to grow on stacks and Bitcoin. And finally, number 3, right? Some of you are in our Discord channel. You will notice that there's a weekly gratitude one-liner, right? And this is to promote collaboration amongst peers, right? And I do this every single cohort. This is actually the 22nd cohort, is the first pure Web 3.0 cohort our team has done. But we found there's a very high correlation to the people who are most actively helping people and the progression and improvement of their project. It sounds counterintuitive because it sounds like, well, I got to take time out to help people, right? But because it did it, it actually increases and accelerates their growth, right? There's a lot of, we could, I could take the names away, right? And just leave the top, say 12 teams, and you'll see there's a high correlation between them helping people and their progress in their project. So that's just something I want to share with everyone. Okay. And so for those of you who made it through the 10 weeks, congratulations, your mindset has been transformed. You tore down previous limitations and you're beginning to unlock your innovation and unlimited potential. Okay. Excellent. So how many made it to the end? 16 teams. Out of 25, so out of 674 applicants, we took 25 of the best ones. And of the best ones, 9 of them couldn't make it to the end, right? Maybe half of them, they just found out entrepreneurship is probably something they can't do, at least not at this point in time. And the other half, they're very smart. They teamed up with other people and made the remaining teams even stronger, okay? So you guys are probably thinking, what are some of the commonalities? What are the common denominators of the people who can make it to the end? One is passion. We notice there's the people who made it to the end, they have passion. It's not just energy level, but it's more like, are you getting excited when you're satisfying your curiosity? And is your curiosity hopefully insatiable in your startup topic? Number 2, collaborative, as I mentioned, right? Number 3, grit, going the distance. But really, grit is more about enduring that short-term pain so you can get that long-term gain, right? And finally, probably the most important one that sums it all up is a purposeful self-efficacy, the courage to face oneself and to change and to develop into an effective entrepreneur in new situations. Because there's one hard fact about entrepreneurship. It's like life. As soon as you solve a problem, guess what is waiting for you? It's a new problem, right? And guess what happens when you solve that problem? Another new problem appears, right? So I think the one hallmark, if I had to sum up in 3 words for all successful entrepreneurs, is they have a purposeful self-efficacy, the ability to change myself. Okay, thank you. Okay, great. So can we invite Trevor up to share a few words? Because Trevor, you're the one who helped us in Shanghai turn a consultancy into a pre-accelerator. It's almost 6 years ago now, right? And since then, we became the longest running pre-accelerator, not just in Shanghai, but in all of China at 21 cohorts. So really much gratitude for you. Also, you started tracking me down last year, right? Hey, Albert, you gotta come help me at Stacks because we have this huge overflow of applicants, right? And of course, you helped me put together a grant, and you've been with the cohort. Aside from myself and my team, you've contributed the most during the entire cohort out of any mentor, right? So could you please come up and say a few words?
Sure. Thanks, Albert. Great to be here and very excited for today. So my name is Trevor Owens. For those of you who don't know me, I'm the managing partner of Stacks Ventures. And so what you're about to see is the pre-accelerator. It's very different than the accelerator. The companies are a different stage. They have different goals and training. But this program is even more important than the accelerator because at the pre-accelerator is where we set the foundation. And this is setting the stage for everything these founders are going to achieve in the future. So one of my favorite quotes is from Elon Musk. He says that running a startup is like chewing glass and staring into the abyss. After a while, you stop staring, but the glass chewing never ends. And so something I said at the beginning of this program to all the founders. I said, we're compressing 2 years of pain into 2 months. You know, the 2 years of pain that you would have if you did the wrong things or you had the wrong foundation, we're going to put you guys through the gauntlet and compress that into 2 months. And so I couldn't be happier to have Albert as the coach for this. He's a really great coach. And he's an extremely tough coach who has been pushing all of these teams over the last 2 months. And I can confidently say that I don't think anything has gotten past him and that no bad ideas have survived this process. And so, as Albert mentioned, there's been many teams who didn't even make it through the process. And that's because they were pushed to the limit to see if they have the grit and the mettle to see if they can really do a startup. And so going through the lean startup process, validating your ideas, it's really not for the weak-minded. It's intended to be ruthless like the market is. You know, the market, it doesn't really care about your feelings, doesn't care about your idea, but it's a sort of a silent and passive killer, right? Like a lot of startups are out there in the market and things aren't working. They're sort of dead already, but they don't even know it. And lean startup at least surfaces, you know, that to the front. And so it lets you know when things aren't working. And that can be really challenging to have to deal with something that you're really passionate about and realizing that essentially your baby's ugly, right? And so the teams who can push through that, who can pivot and be intellectually and strategically flexible, that's the hallmark of what we're looking for and our investment thesis in what makes a great founder. So we look for people and outstanding teams who can find an easy way to do something difficult. So that comes back to that intellectual and strategic flexibility. And that's really what it takes to succeed in the market in order to do the lean startup process successfully. And this pre-accelerator has been sort of a mini, you know, the first 2 years of the startup compressed into 2 months. And so the teams that have made it to today and you're about to see it present, they might actually have what it takes to handle staring into the abyss and chewing glass. So with that, I want to let everyone know, of course, these pitches are not meant to be the same level of polish that you would expect from the accelerator. We actually spent 2 months to prepare for the final pitch, but these teams have been majority of their time going through the lean startup process and validating their ideas, pivoting into the best opportunity they could find. And so because they spent so much time building on the foundation, they only about 2 weeks for the pitch. But with that said, I think everyone is really about to enjoy what we're going to see here today. So thank you, everyone, and I'm looking forward to the show. And great work to Albert and the team.
Thank you, Trevor, for those very real and encouraging words. Thank you so much, and thank you for not giving up. In the beginning, I was a little bit resistant to doing this, but thank you for your persistence. And here we are at the beginning of a new wonderful journey, right? In Shanghai, you helped us get started with 21 cohorts. Well, with this, we're going to take it a lot bigger and a lot further. Okay. So looking forward to continual close cooperation with Trevor and Stacks Foundation. All right. So without further ado, let's get started. First off, out of the 16 teams, we've selected 12 teams to represent the entire cohort 1. You can see their logos here, super diversified, as you will soon find out. And to what Trevor was saying, please keep in mind that the pre-accelerator is like the focus is to build a foundation. So the pitch is here is just hello world to our community so they can attract and find more allies within Stacks and Bitcoin community. Whereas the focus of the accelerator is hello world to global investors, right? And to really, really grow the startup. Okay. So again, 2 weeks versus 2 months. So please keep that in mind when you're hearing the pitches. But at the same time, I think everyone will gain a lot out of it because a lot of the concepts are first time ever being developed on Stacks and Bitcoin. Okay, great. So okay, so we're gonna get started. Each pitch is about 5 minutes, and let's get started. First up is Abdel from Liquid BTC. Abdel, you're up.
Thank you, Albert. Hello, my name is Abdel, and I'm the founder of Liquid BTC. We are a protocol that will lead the Bitcoin DeFi revolution to take DeFi options trading mainstream. It is the perfect time to grow our solution because DeFi is just starting on Bitcoin. Here is why. Ethereum DeFi has exploded over the last 3 years from just millions to over $140 billion in 2022. And it was possible thanks to smart contracts. Now, an even bigger DeFi opportunity on Bitcoin is here. Today, DeFi on Bitcoin is in the millions of dollars, just like Ethereum was in 2019, right before it multiplied by 600 times in just 3 years. This opportunity is possible thanks to Stacks creating smart contracts just last year of 2021, making the Bitcoin DeFi revolution possible. As this Bitcoin DeFi revolution accelerates, there will be millions and then billions of dollars put into liquidity pools in all the DeFi projects on Bitcoin. But the nature of DeFi is that regular and large price fluctuations cause 50% of liquidity providers to lose money on their investments. Let me show you a typical case. Let's just take John here, for example. John invested $10,000 in a liquidity pool of Stacks and XBTC, but due to price fluctuations, he incurs 15% or $1,500 loss. As you can see, these losses quickly add up for frequent liquidity pool investors. Before, there was nothing John could do against this loss. But now, John can use Liquid BTC, and he only needs to pay a fraction of the principal to protect himself from the $1,500 loss. As easy as filling up the range to protect against and how much protection percentage John is looking for. And it's done. Providing this kind of solution on Stacks with native Bitcoin is a key to protect the $1 trillion worth of Bitcoin liquidity. So how are we able to do that? Our solution locks native Bitcoin with DLCs, a new technology on Bitcoin, to create liquidity in Stacks. Then we use smart contracts to give investors the right to on this liquidity in the case of a loss. This is how we bring non-custodial options DeFi trading to Bitcoin and Stacks. And the potential for options trading on Bitcoin is just huge. We'll first service all liquidity pool providers on Stacks, then bring on any Bitcoin holder that wants to earn more yield on their Bitcoin in a non-custodial way. And then, as the Bitcoin DeFi revolution continues and disrupts traditional options trading, we will address the staggering $12 trillion traded on real-world assets. As you can see, the Bitcoin DeFi revolution is just starting, and we are in a unique position to capture this market. And our competition just can't match up with our superior DeFi option solution. For one, we are non-custodial on Bitcoin, the most secure cryptocurrency in the world. And we are early on Stacks, so we can ramp up quickly to build a strong foundation and jump into more markets. And since our solution is decentralized and our customers benefit from our tokens, we create a network effect that provides more value for our users. Finally, our killer feature is that we have the lowest fees. On the point of our fees, here is how our business model works. If John buys an option contract for $100, 99.5 go to the contract, and 0.5 go to Liquid BTC Treasury. Part of this 0.5 go to our token holders to create word-of-mouth marketing, which reduces user fees over time. And the rest go to our investors. This similarly small amount adds up quickly as we have already shown the huge market size. And we have already started with our marketing channels. We have over 70 users lined up to use Liquid BTC to protect against liquidity pool loss. We have reached to Alex, which is already averaging more than $25 million in transaction volume and growing. And we have a strong partnership in place with DLC.link. Finally, we are the best team to make Liquid BTC the market leader in options trading because I'm a serial entrepreneur with my previous business bootstrapped to generate over $1 million from building mobile and web apps for retail companies and financial institutions. So I understand software, retail users, as well as the high quality that is expected of financial companies. My CTO has been with me for over 6 years, and he is a full stack developer who is fluent in smart contract programming. Our chief marketing is already experienced in finding, attracting, and onboarding retail users, as well as developing marketing channels with strategic partners. Using our team's combined business and technical skills, we'll make Liquid BTC the best options protocol on Stacks. We are looking for admittance into the Stacks Accelerator to further grow our user base, develop more options for other cryptocurrencies, and finally raise capital to offer our native Bitcoin options solution cross-chain. Thank you.
Super. Thank you, Abdel from Liquid BTC. And next up is Aidan from Lucid Finance. Aidan, you're good to go.
Hi, my name is Aidan, founder of Lucid Finance. I'm thrilled to be here. We are at the beginning of a huge market opportunity created by the recent crypto company crash. There are over 30 crypto companies went bankrupt in the last few months. Those bankruptcies has caused 1.7 million investors to lose a staggering $8.2 billion. And who knows what company might be next. And I was almost one of them. When I was a college student, I used to buy and store all my Bitcoin on a regional exchange. I luckily withdrew all my crypto assets 1 week before severe hacking. That exchange lost over 1,000 Bitcoin in the hack. Some of my friends and others who were not so lucky, they are still fight with the company in the court today. So that got me thinking, is there a better way to store and grow your Bitcoin without fearing losing all of them? So I started to research the root of the problem, and I find out that all those bankrupt companies, they were actually centralized, which are over-leveraging or doing dangerous activities with investors' Bitcoins. And their source code is private and compiled, making it even less transparent. On top of all this, the user experience and all those KYC make it overwhelming. Introducing Lucid Finance, a decentralized Bitcoin investment platform. We get rid of those human risks and created the first trustless votes on Bitcoin by employing smart contract on Bitcoins. Because our smart contracts are written in clarity, they are 100% human readable and decidable. And last but not least, we redesign the user flow and eliminate lengthy KYC. Lucid Finance provides the easiest way to help you earn yield at a controlled risk level. As a user, you just have to put your Bitcoin into our non-custodial vaults and select the level of yield you want to earn. Our vault is enabled by new DLC technology. That means even if our company went bankrupt, your Bitcoin will still automatically return to you. So you never have to worry about losing all your Bitcoin again. For stable vaults, we would lend your assets to the counterparty within the protocol and help you earn a stable and low-risk yield. For an aggressive vault, we would pair your asset with other tokens in the token reserves and put them into the liquidity pool of other DeFi to help you earn a higher yield. We are building our communities to attract retail investors in the borderless Bitcoin communities. Once we get traction, we would move to Taiwan and Hong Kong institutions, where big players are, by leveraging our local connections and tailor-made user experience. After that, I will move to Asia and the rest of the world. Our business model is simple but solid. 10% performance fee plus flexible borrowing fee for helping you firm pairs. That's it. And we are the only product that supports native Bitcoins, transparency, high yield, and easy to use. We have over 100 community members and have early commitment of 40,000 USD and still counting. What excitement. We are partnering with the world-class entrepreneurs in Stacks, as well as the local banks to build these products. DLC.Link provides us tech support for DLC, and we are partnering with Liquid BTC to solve the impermanent loss issue together. We expect to have our first MOU with institutions in Q3, launch and get first revenue in Q4 this year. My co-founder, Sean, Hannibal, and I all graduated from national Taiwan universities. We are a group of former entrepreneurs, engineers, and product managers. I used to work at Microsoft as an engineer and turned into product manager. And Sean has been working in crypto industry for years. On the other hand, Hannibal used to lead an award-winning hardware startup and has extensive experience in product design. Our passion for this topic and our local connections make us the best team to put this together. We are in the excellent direction and would and would look forward to get into Stack's Accelerator to boost our business. Thank you.
Excellent. Thank you, Aidan from Lucid Finance. And next up, Anatoly.
Hi, thank you, Albert. Excited to be here. My name is Anatoly. I'm co-founder and CEO of StackSforce, gaming platform that helps Web2 game developers bring their games to Web3. Every 20 years, there is a major paradigm shift in the gaming industry. Started more than 40 years ago with PC and console, it moved to Web2 with mobile revolution 20 years ago. And today, we all see the rise of Web3 on the blockchain. At the same time, from 5 million active games, less than 1% on the blockchain, because there are major problems preventing game developers from bringing their game to Web3. They have to cope with hard integration with blockchain. They have players complaining on slow payments and bad user experience, and they have to redesign the whole gameplay of their game to tailor it to Web3. And as a game producer of 7 games with tens of millions of players, I can tell you that gameplay redesign is literally the last thing you want to happen with your game. And there were no good solution to all these problems until today. I'm happy to introduce you StackSforce. Using our software developed kit, game developers could connect their existing game to blockchain with minimum effort. Using our internal deposit system, players can do fast payments. And with StackSforce, game developers can keep original gameplay of their game. Using our platform, game developers could bring their existing game to Web3 in less than a week and almost at zero cost. That makes it at least 20 times faster and cheaper as they have to do it today. Our platform consists of SDK for developers and player portal. In our SDK, we have Web3 wrapper for existing game and wallet API enabling connection with player portal. On the portal, players can discover new games, manage their wallet, and make deposits. How this works? We are targeting low-hanging fruits of the gaming industry, existing Web2.0 games, like this cool Raiding Rush. Using our Web3 wrapper, game developers could connect Raiding Rush to our Web3 portal in less than a week. And by keeping the original gameplay of Raiding Rush, we remove the risk that players will not like their gaming activity. After being connected, wrapped game is used for original gameplay. And based on how many successful raids you did last week on the player portal, you will receive your rewards and incentives.
Dylan, you're good to go.
Hello, everyone. It's great to be here. I'm Dylan, the CEO of Bitflow. We're working on the holy grail of DeFi protocols for people who self-custody their Bitcoin savings. Why does that matter? Well, look at how badly Celsius just failed millions of customers. They overpromised on yield and underdelivered to the point of bankruptcy. How much did they lose? Imagine 50,000 families in the US who finally saved up enough for a 20% down payment on a house, and all that money gone. The unfortunate reality is Celsius isn't the only predator after your savings. People are trying to earn a yield with their Bitcoin and grow their savings, but the mistake they make is letting someone else control their money. Introducing Bitflow, a stable swap protocol with an emphasis on savings, where liquidity providers holding their own native Bitcoin benefit from boosted stablecoin yield. With Bitflow, your stablecoins and your BTC savings work together in harmony to compound your wealth, and nobody else ever has control of your Bitcoin. So where does the yield come from? 2 words, trading activity. More activity, more yield. It's that simple. The protocol collects a fee on all trades and pays out the stablecoin rewards to liquidity providers, aka LPs. With Bitflow's design, the LPs who are verified BTC holders have access to double the rewards. This way, people looking to safely grow their savings with native Bitcoin finally have an advantage in DeFi. Meet Bob. Luckily, he withdrew from Celsius just in time. And now he uses Bitflow to earn more stablecoins with his savings based on real trading activity. He also gets instant pain relief during volatile markets, given his access to boosted rewards as a verified BTC holder. Bob loves this approach. Why? He measures his wealth in dollars and Bitcoin, and now he grows his wealth using the same assets. He can feel safe watching the yield flow in and rest easy at night. And Bob isn't alone. We're building strategic partnerships with teams that can help empower a Bitcoin-centric approach to savings. And we've seen traction with over 140 signups in just a few weeks. Bitflow offers trustless stablecoin swaps and savings growth, thanks to clarity functions on stacks and discrete log contracts for Bitcoin. The protocol is governed by a DAO where users can vote on important updates, like adding new stablecoin trading pair, for example, by holding BFF, our governance token. Currently, the deepest liquidity pools of price stable assets reside on other chains that offer 22 times lower protocol fees. Bitflow matches these low fees to attract trading activity. More volume attracts more LPs, but so does the Bitcoin integration, and they stick around for the additional rewards they get as a verified BTC holder. Bitflow users benefit from existing network effects in large markets. And this year, the total market cap for stablecoins surpassed $160 billion. We've seen over 100 different stablecoins get launched, and users need a way to trade between them. Curve, a stable swap competitor, transacts over $6 billion in monthly volume, despite forcing users to hold CRV, a volatile governance token, to maximize yield. With Bitflow, the best strategy is just holding stablecoins in Bitcoin. At $400 billion, the market cap for Bitcoin is over 600 times larger than CRV. Imagine what Bitflow can do serving a larger savings market with a superior asset. The competitive landscape shows that nobody else can solve our customers' pain point. Centralized services have proven they can't be trusted, and Curve is market limited by the appetite for its governance token. With Bitflow, there is no compromise. We're going live on testnet next month with a bug bounty program to reduce risk and grow the user base. Early in 2023, we'll begin generating revenue when we proceed with our mainnet launch. You can see the new trading pairs will create additional revenue streams, but a key takeaway is that integrating Bitcoin will make Bitflow a popular destination for liquidity providers. And this is only the beginning. We are at the frontier of possibilities for giving Bitcoiners a strategic advantage in DeFi. Diego and I are the perfect team to build and distribute this protocol. Together, we have 16 years of experience with distributed systems, fintech, marketing, and business development. We've been active in the Stacks community since 2.0 launched, and we know what it takes to get this done. We're applying to the Stacks Accelerator because we know we can go further together. There's a huge opportunity in front of us to transform savings growth. So let's make sure that nobody risks losing money to companies like Celsius ever again. Thank you.
Wow, thank you, Dylan from Bitflow. Curve better be careful. Okay, Gene, you're good to go.
Hi, I'm XJ. My team and I are building PurpleDAO to invest in startups building for Bitcoin. Why Bitcoin? Because it has the highest market value, $600 billion, and is still a blue ocean. Why an investment DAO? Because the venture capital industry hasn't seen much innovation since 1940. PurpleDAO is here to disrupt with our AI-powered investment tools and make venture capital Web3. Why now? Now is actually a great time for investors to enter Web3 because the valuation of many great Web3 startups is as low as 50% compared to last year. Why a DAO? Our tokenomics incentivize you to help us grow. As our investor, you receive an NFT, which gives you deal voting power. And then you receive reward tokens when you help us source deals and due diligence. Our reward tokens can be swapped for NFTs, which creates a win-win because we outsource deal sourcing and diligence to you, and you get more investment shares by helping us. To go to market, we are partnering up with industry leaders. To mitigate risk, our deals are selected by Bitcoin accelerators. We have global investor networks to co-invest with us. We are the same team behind VenturePool, where we built AI-powered investment tools, and a DAO expert will help us build our DAO. As our investor, you can use our investment tools for free. Our tools use machine learning and already cut 70% of screening and diligence time for many professional investors and accelerators. They will be integrated into our Discord channel for you to review and bookmark deals. to screen deals based on valuation, investment risk, financials, cap table, company strength and weakness analysis, and automated diligence. We don't stop after we make an investment. We have tools to help us manage our portfolio companies, monitor their growth, and help them grow. Purple DAO is here to disrupt. Our magic sauce is our AI-powered investment tools. We decentralize venture capital, and our carry fee is half of our competitors. Our investment tools are already used by many investor and accelerator customers because we help them save 70% of screening and diligence time. To name a couple, the M&A department of Binance uses us to source more deals. The largest accelerator in Europe, Startup Bootcamp, uses us to select winners for their program. We have been winning awards every year since company incorporation, first at home in Switzerland, then internationally. Our fees are a standard management fee for an early stage fund, plus a carry fee that is half of our competitors. We're raising a 10 million fund from professional and retail investors. Because we see faster exits in Bitcoin startups, our goal is to double your money in 3 years with a projected internal rate of return of 25%. We'll cut small checks into about 200 companies and enjoy the upside because we invest very early. Our team is experienced, well-networked, and diverse. I have been an angel investor since 2016. My blockchain portfolio companies include Ripple and Neo. Our venture partners are our co-investors, as well as our partners in raising our fund. Do you want to build the future? Invest with Purple DAO. Thank you.
Wonderful job. Thank you, Gene, with Purple DAO. And next up is Norvell from RaxPlay. Norvell, you're good to go.
Hello, my name is Norvell Robinson, and I am CEO of RaxPlay. We are a social marketplace designed for artists and their fans. Why now? For one, art has made a full recovery from its dip due to the pandemic. Not only that, but projections predict that the NFT market will grow by more than 300% by 2025. The time to act is now. Forbes released an article on the rise of street art just last month, and we are at the forefront of this movement, and we welcome you to join us. Artists want to capitalize on the Web3 movement, but have been unable to due to the lack of support. Artists entrust platforms with their life's work, and it is our duty to do our part and make the process simple. Fans are frustrated because they see a lot of low-quality content on current marketplaces. We will fix this issue. We designed our platform with the end user in mind. Artists will be welcomed with structured tutorials so they can be confident that their work is represented properly and, most importantly, safe. We offer a curated selection of talented artists who have been featured in exhibits across America. We offer a user-friendly platform designed to make things clear and simple. Artists can focus on the art because we take care of the rest. We target a niche community of amazing artists based here in Detroit. but they have been featured in exhibits all over America. We're starting small, but have huge growth potential. And I'm excited to begin this journey with you. Detroit is embracing mural art, attracting and contracting artists to do paintings all across downtown and the surrounding areas. We will capitalize on this growth by holding educational events and expanding our network of incredible artists. Our flywheel is designed so that fans and artists are complementary to each other, incentivizing trust and support. Our competitors are the art galleries that artists are most familiar with, but we hold the advantage over them because we display the artist's work to a more broad and more focused audience. We're going to take an 8% fee for all transactions on the platform and reward fans for doing tasks that enhance community experience. RaxPlay is a multiplier. This is a case study from a customer who partnered with us this year. He made $70,000 in crypto space prior to working with us, and we were able to 3x that. We've been honored to receive grants from amazing companies such as DTX, TechTown, as well as Google startups. We have amazing backing from GVeta, NVIDIA, TechTown, and the Stack Startup Lab. We've been running a profitable business for the past 3 years. Our incredible team is made up of myself, who has 3 years of experience in tech, my co-founder, Carlos, who is our lead design and has freelanced for a variety of high-profile customers and specialized in Unreal development. Aaron, who has over 5 years of experience as a business analyst, who is helping make us make wise business decisions. Jeremy, who has over 20 years of experience in tech, and Leroy, who has 20 years of experience and is VP at A&R First Access Entertainment. Our first revenue will come in Q4 2024, and we will implement our proof of ownership feature in Q4 of 2023. Thank you. And our ask is to be granted access into the Accelerator, and any intros that you have, artists, VCs, will be more than happy to hear from them. Thank you.
Thank you, Norvell from RaxPlay. And next up is Robin from NFT to.
Hi, I'm Robin, the CEO and co-founder of NFT to Loan, an NFT lending protocol on Stacks that spans the bridge between DeFi and NFTs by giving out loans against your NFTs. The problem is investors want assets that they can borrow against with low interest, but there's no way of borrowing against your NFTs on Stacks, and thus holders are forced to sell in order to get liquidity. The Fed keeps hiking interest rates, which makes loans expensive, and there's missing liquidity for a lot of NFT holders and customers. As you can see in the top 10 Megapond holder wallets, most of the time NFT holders struggle with liquidity. There is less than 12,000 stacks of liquidity in their wallets, and at the same time their NFTs are valued more than 370,000 stacks, which means there's 32 times more NFT value than liquidity in their wallets. Introducing NFT to Loan. It gives NFTs the ability to borrow against inexpensively. It pours more liquidity into the whole market, and it spans the bridge between NFTs and DeFi on Stacks. You love your Megapond ape and want to keep it but need liquidity? Our product is your solution. How does it work? You deposit your NFT, get the widely used and liquid stablecoin USDA as a loan. When you're done using the loan, you can repay it and get your NFT back. If your NFT's value drops below liquidation price, your NFT will be liquidated in an auction, and the loan is repaid automatically. When insurance is added, you can buy back your NFT before the auction happens. NFTs can be used to tokenize just about every asset. DeFi can be used to leverage investments and much more. We're combining the value of NFTs and the utility of DeFi. And both DeFi and NFTs are amongst the biggest markets in all of crypto and the Stacks ecosystem. The NFT market is expected to be rapidly growing in the future, as you can see in this graph of the next 8 years. We have 3 main competitors on ETH and 1 on Solana. We're on Stacks, offer variable vaults where users can choose their risk and interest rate, time element liquidations to protect our users, and self-repaying loans using collection-based staking rewards, as well as instant and cheap loans and insurance features. We have 3 different revenue streams. Firstly, 2 to 10% interest on loans. Secondly, we will liquidate positions at a 31% debt to collateral value by doing an auction, and history indicates auctions close near floor price, which leads to a 3x return on every liquidation. And lastly, we have insurance fees for giving users the ability to buy back their NFT in a liquidation event by repaying their loan and paying a penalty fee of 25%. We grew our NFT to loan follower base to more than 100 members. We already built an NFT community of more than 900 members called Rehab Resort. And the market size that we're addressing right now is about $2.4 billion, and that's just the tip of the iceberg. Right now, we're in a Web3 startup lab working with Redstone, Byzantium, and StackerDAO. We have plans to collaborate with AlexGo, Megapond, Gamma, and Arcadico to use their mint and burn mechanism for USDA. And finally, when we're expanding to other chains, we'll partner with Chainlink and bring loans to the famous Bored Ape Yacht Club. I'm Robin, the CEO, and work for Apple. Julian is our marketing and project management guy and worked for one of the biggest media brands. Leo is currently visiting art school and is our designer. The 3 of us created Rehab Resort together, so we have a good experience working as a team and working in the Stacks ecosystem. And lastly, Michael is our full stack dev and has great experience in Clarity language. He's our lead developer. Last but not least, we will start a marketing campaign in this month. Later on, we'll offer a token and create a DAO. And next year, we'll launch our mainnet with Megapond and insurance features, which will kick off our revenue. And later on, more features like variable vaults and self-repaying loans are added to bring the masses to NFT to loan. And looking into the future, we want to bring NFT to loan to other chains to address the huge market that is already present in the likes of Ethereum. Also, besides art, what we're seeing right now, many more valuable assets can be tokenized to NFTs. We can already see this trend going in real estate and housing markets, and NFT to loan will capture all of this value.
Scott, you're ready to go.
Hi, I'm Scott, CEO of BitBasel, and we're putting the power back into the hands of the crypto artists. NFTs exploded in 2021. According to a report by Grandview Market, non-fungible tokens are expected to grow from just 4.1 billion in 2021 to 211 billion by 2030. But we're already seeing a mega trend emerge in this nascent market, which we're prepared to tackle. As you can see with these charts, pure art NFTs had growing sales in the early part of 2021, but we noticed this trend shift around April. This coincides with the launch of the PFP projects like the Bored Ape Yacht Club and other utility-focused NFT projects. Since then, artists have had to compete for collectors' attention with projects that have raised a large marketing budget through mints, gave members exclusive perks and access to private events, and have mainstream brands and celebrities behind them. If we let this trend play out, the gap will only widen and artists will be left behind. But most artists aren't businessmen, they're storytellers. We want artists to spend their time doing what they love, but 80% of their time is spent on sales and marketing to attract collectors and adding utility benefits to their tokens to keep their collectors happy. We've interviewed several artists who have even hired full-time social media managers to promote through Twitter and Discord. This shouldn't be the case. Introducing BitBasel's art utility layer, where artists won't have to worry about either of these things and can spend their time doing what they love. Let's start with utility. We have our MVP live on Stacks testnet today, where we can easily add utility to artists' work by minting through our smart contracts. Take, for example, this piece by legendary OG crypto artist and BitBasel friend, Gus GG. Through our token portal, Gus can easily mint his art and set it to be auctioned at one of BitBasel's live events. On top of this, we can easily add token-gated content to his artwork. For example, here we token gate a ticket to the exclusive BitBasel house during Miami Art Week. So Gus's collector, let's take for example, Elon Musk, can access the event just for holding the token in his wallet. This adds more value to Gus's art, satisfying Gus's need to add utility to his token. But that's not the only utility function we're premiering on our platform. Our delegated borrowing features add even more utility. Let's say Elon's not able to make it to Miami in December for Art Week. He can rent out his token for the week to someone who is eager and willing to pay money to attend. This passive income opportunity is another prime example of the utility we give artists on our platform and keep collectors coming back for more. At BitBasel, we don't work with all artists. We only work with artists that align with our values of creating a sustainable, decentralized future. And that's what our community has come to expect from us since our founding in 2020. Over the past 18 months, we've been educating our audiences on Bitcoin and other emerging technologies, and we partnered with dozens of artists to do drops across different marketplaces. In that time, BitBasel has become a go-to brand in the blockchain ecosystem and has been featured on leading publications such as CoinDesk, Cointelegraph, and TMZ. We have a community reaching almost 10,000 crypto natives in Miami and across the world, eager for BitBasel's next drop. We've pioneered a hybrid event model where we host simultaneous events IRL and in the metaverse to highlight our artists to a global audience. Our brand equity is something our artists have always benefited from, but now with the launch of our art utility layer, we have the tooling to solve for some of their other most pressing needs. In terms of competition, BitBasel is offering a highly differentiated product to the market. Compared to a project like the Bored Ape Yacht Club, we're more focused on launching with real artists rather than virtual monkeys. Compared to an artist marketplace like SuperRare, we have the ability to add token-gated content to the art and leverage delegated borrowing, making our utility functions a clear differentiator. Like Gamma, we're a Bitcoin-only platform, but unlike them, we have a strict curation process, only working with top artists to mint with us. Our business model is straightforward. We take on average 20% of sales through our platform. We can justify charging this high fee because we only feature a curated selection of works, helping artists sell their works faster and at a higher price versus doing it on their own. And we have an exciting go-to-market strategy in December in Miami at the largest art fair in the world, Scope, where we'll be targeting the growing blockchain art market, which only makes up 2% of the growing $65 billion art market in total. At Scope, we'll be hosting live auctions with a curated selection of artists through our new platform. Our roadmap is to launch our delegated borrowing feature in early 2023 and add even more utility functions to our product throughout the rest of the year, providing the ultimate utility layer for artists on Bitcoin. We have an experienced team with years of experience in the blockchain, metaverse, and art sectors across our management, marketing, and product development leadership. We're looking to grow with partners who can add top IP to our pipeline, make introduction to enterprises, and assist us in expanding globally.
You're ready to go.
Good morning from Toronto. Thank you for being here. My name is Tom Petersill. I'm the founder of Easy Labs. Our vision is a user-owned health information system that incentivizes better health on a secure and affordable blockchain network. Timing is optimal. Patients now own their data. COVID created urgency around prevention. Quality information is available from wearables and EMRs, and tokenomics for the first time allow for affordable tools to engage and motivate users. The problem is that every one of us has an exceptional amount of health data, but we don't really own it. It's widely distributed, it's hard to analyze, it's far from useful. This inaccessible health information, coupled with expensive treatments, leads to delayed interventions. And it's these delayed interventions that lead to preventable diseases and cost the US $740 billion a year. So what do? The answer is a wellness solution that lives side by side with the healthcare system. Our platform allows you to easily onboard your data, own it, and do what you want with it. We allow our users to run analytics from multiple healthcare perspectives, generate health reports, and employ risk calculators. All the while, we're using tokenomics to motivate you to gather more of the right data. We then reward you for using it to improve your health. If you selfishly engage in this flywheel, you will also produce valuable data that will then empower you to monetize. Let's take what might be the best example, prediabetes. 96 million American adults are pre-diabetic. It's reversible, treatment is easy and affordable, but most people don't even know they have it. As a result, 1.5 million Americans become fully diabetic every year, and for them, life will never be the same. It would include painful daily injections, over $17,000 a year in expenses, and a high chance of losing a leg to amputation. EasyLab is here to incentivize this health journey. We gamify early detection and reward pre-diabetics for not ending up like the 34 million Americans already diagnosed with irreversible diabetes. The trend is moving toward prevention, which is already a $100 billion market. You can see it in models like value-based care, where significant funding is starting to transition toward things like diabetes prevention. And we are positioning ourselves in the center of these opportunities. Prior to that, we focus on the $30 billion spent on healthcare branding and promotions. And the immediate opportunity is the $3.2 billion in medical referrals, where we already have a contract with a telemedicine company. The competition is significant and dynamic, but none of these solutions are easy or affordable. Most importantly, they don't have a system that incentivizes users to build up their data so it's worth monetizing. MD, which just received a grant from the Solana Foundation, is a good example of an interesting solution with half a flywheel. Our revenue comes from a couple different models. It's a mix of Web 2 and Web 3, with early focus on referral and affiliate agreements like the contract for $20 per referral, followed by tokenomics where users can choose to buy access to our platform rather than earn it, for example. And of course, the goal is for users to monetize their data in stacks for which we collect a fee. We are running pilots with laboratories, healthcare data aggregators, medical SaaS providers, and it's these partners who put us in front of millions of users at little to no cost and really get that flywheel turning while also generating B2B revenue. We're also getting to know the data markets, and it's clear that once we can generate holistic longitudinal health data, we could easily monetize it. Today, I'm proud to say our MVP is the only way for you to get detailed lab reports online, easily, anonymously, and for free. Within 30 days, we'll be able to connect to your wallet and issue you tokens for interacting with our platform. Within 2 months, we'll offer wearable integration, and 6 months post-funding, we'll have a comprehensive library of interpretations, deployed smart contracts to control access and reward behavior. It is also where we're going to generate significant revenue. We have a mature team of technical and business resources and practicing physicians that together bootstrap what we've built so far. And I'm excited to share that just 2 days ago, in part thanks to this program, we've onboarded a physician who is a former senior healthcare on blockchain consultant for the United Nations. We're looking for support from the Stacks Venture Accelerator with minimal funding to deploy smart contracts on an existing MVP, and we'd be delighted to have another conversation with any of you and together make a massive social impact. Thank you.
Thank you. Tyler, you're good to go.
Hi, I'm Tyler Wall, and we're building FanStacks. FanStacks is the Web3 content membership platform built to help content creators in the adult entertainment industry maximize their income with crypto technology. As of this year, the adult entertainment industry has exceeded $100 billion, accounts for more than 30% of overall web traffic, and more than 75% of men and women partake monthly. It's already projected to triple its growth in the next 8 years, and that's largely due to the rise of the creator economy with platforms catering to the individual. The time is nigh. Here's the problem with centralized platforms. Existing legacy banking institutions leave them to deal with shady processors, which are freezing accounts, charging enormous fees, and creating chargebacks and delays with settlements. A recent survey showed that 90% of workers in this industry experienced detrimental effects to their livelihoods after the banks implemented stricter rules, with over half losing more than 50% of their income. However, the future is looking bright. Enter FanStacks, the premier Web3 content membership platform that unlocks instant, reliable, and secure payment solutions for content creators. With baked-in stacks and cryptocurrency-based payment solutions, creators benefit from super small processing fees, no chargebacks, and instant payments. The security of building on Bitcoin makes this all possible. Creators will be able to keep more of what they earned without the worry of when they receive their funds. Through our simple sign-up process, creators can join the community in a few guided steps. They input their basic information, generate a unique user key, and build their profile. From there, they can begin to publish their content, grow their fan base, and start earning. Now, over the past decade, existing platforms have created ways to help individuals increase their income while making it easier to do so But the underlying obstacle is they are all constrained by centralized systems and subject to inherent banking problems. We solve all of this through developing on Stacks and having simple, seamless ways to offload their earned income without any hassle. In addition to the fast, easy, and reliable payment advantages of building on Stacks, our platform offers creators lifetime ownership of their content and fan base while also creating additional revenue streams. The foundation of the model is a subscription platform where users can subscribe to their favorite creators' content. We take a 20% revenue split from subscriptions and unlock new income streams through NFTs and tokens. Our business is similar to OnlyFans, but fundamentally our creators are getting more value for the work they put in. For example, creators can stand to expand their income streams through the use of NFTs. They'll have the option to upload exclusive content to the fully integrated FanStack's marketplace. A 3% creator fund is built into the tokenomics of FanStack's, where after an NFT is minted and sold, it generates royalty income for its creator forever. Creators benefit from the lifetime of their content. Initially, we'll offer Bitcoin, Stacks, and fiat to be used for payments. And we have plans to introduce a native token in the future while exploring partnerships with exchanges to give clear, accessible ways to off-ramp their spendable money, another advantage of building on Stacks. However, we see there's a clear path to immediate traction by solving the payment processor issues first before layering in token features over time. This allows us to keep our build simple, less expensive, and get live as fast as possible. Media consumption is primed for its next step in evolution. The world of building connections is inherently more valuable over a longer time frame than the one-sided consumption, and FanStack is taking us into a world of genuine, own connections and relationships. We are the next phase of transcendence in the interactivity level around consumption of this media by creating something more long-term, more sustainable, more real, and more revenue generating. We are redefining what 1,000 true fans means. We've seen some early traction with 50 early adopters and counting, 3 modeling agencies, and in conversations with 2 pre-seed investors. I'm Tyler, founder of FanStack. I've been involved with Stacks since the initial token launch, and I've already delivered a project through the Stacks Grants program. I'm a serial entrepreneur, have served several high-level influencers and leaders in the wellness and fitness industries for over the past decade. And our CTO, Kellen Lindsay, has been in the blockchain world for just about a decade himself, full stack developer, and experience with several other blockchains. We're taking a layered approach, bringing on influential creator founders, then further developing strategic partnerships before launching our NFT marketplace and introducing our native token features. Soon after that, we'll open up the platform to a wide range of developers and applications to expand the ecosystem. Think building on WordPress versus building on Squarespace. We're aiming to apply for the Stacks Accelerator program to help transform this ripe industry, scale, raise awareness, and grow into our potential. Thank you.
Super job, Tyler. Wow. Is everyone excited as I am to see all 12 of these teams